Big news in Hollywood, Paramount and Skydance join forces. Booyah! We've got a blockbuster deal in Tinseltown, folks. Paramount and Skydance are tying the knot. This is huge news for the entertainment industry. It's like two heavyweight champs joining forces to take on the world. We're talking about a game-changing merger here. Why is this such a big deal? Well, Paramount's been struggling lately. They've been losing the streaming wars. But Skydance? They're the hot new kid on the block. They've got deep pockets and a track record of hits. This merger could be just what Paramount needs to get back in the game. But here's the real kicker. This merger isn't just about making movies, it's about creating a media powerhouse. We're talking about combining TV, movies, streaming, and even video games. This new company could be a one-stop shop for all your entertainment needs. Are you ready? Let's dive in. Alright, let's talk turkey. This merger isn't your run-of-the-mill handshake deal. It's a complex financial transaction that would make even the sharpest Wall Street suits scratch their heads. But don't worry, I'm here to break it down for you in plain English. No fancy jargon, just the facts. First off, we're looking at an $11.5 billion deal. Skydance is ponying up $5 billion in cash and stock. They're also taking on $3.5 billion of Paramount's debt. That's like buying a house and agreeing to pay off the previous owner's mortgage. Smart move if you ask me. It frees up cash for the new company to play with. Skydance isn't just writing a check. They're bringing in some heavy hitters to help finance this deal. We're talking about RedBird Capital and KKR. Their involvement gives this merger some serious street cred. Paramount's existing shareholders will own about 16% of the new company. They stand to benefit if this merger pays off big time. Let's talk about who's going to be running the show at this new media juggernaut. Because in business, leadership is everything. And this merger is bringing some big changes to the corner office. First up, we've got David Ellison. He's the big cheese at Skydance, and he's going to be taking the reins as CEO of New Paramount. This guy's got Hollywood in his blood. His dad is Larry Ellison, the Oracle billionaire. But don't think he's just riding on daddy's coattails. David's built Skydance into a major player in just over a decade. He's got the Midas touch when it comes to blockbusters. Now what about the current Paramount brass? Bob Bakish, the current CEO, is out. That's the price of progress, folks. But he's not leaving empty-handed. Word on the street is he's got a golden parachute worth millions. The rest of the Paramount leadership team, their fate is still up in the air. Sherry Redstone will still have a seat at the table, but her influence will be diluted. Now let's get to the meat and potatoes of this deal. Why go through all this trouble? Two words: synergy and profits. This merger isn't just about getting bigger, it's about getting better. It's about creating a whole that's greater than the sum of its parts. First off, we're looking at some serious cost-cutting potential. When you combine two big companies, you can eliminate a lot of redundancies. That means streamlining operations, cutting duplicate jobs, and negotiating better deals with suppliers. Analysts are projecting savings of hundreds of millions of dollars. That's money that goes straight to the profit column. But it's not just about cutting costs. It's about creating new opportunities. Paramount's got a massive library of content and a global distribution network. Skydance brings fresh creativity and a track record of hit-making. Put them together and you've got a recipe for box office gold. We're talking about leveraging Paramount's franchises with Skydance's production chops. And let's not forget about streaming. Paramount Plus has been struggling to keep up with the likes of Netflix and Disney Plus. With Skydance in the mix, they've got a chance to up their game. Section 5, Red Tape and Roadblocks, Navigating the Approval Process. Hold your horses, folks. Before we start counting our chickens, there's one big hurdle this merger needs to clear: regulatory approval. Uncle Sam doesn't just rubber stamp these mega deals, they put them under the microscope. And for good reason. We're talking about a transaction that could reshape the media landscape. The government wants to make sure it doesn't hurt competition or consumers. First up, there's the Department of Justice. They'll be combing through every detail of this deal. They're looking for any red flags that might signal antitrust issues. Are we creating a monopoly? Will this hurt consumer choice? These are the questions they'll be asking, and let me tell you, they don't mess around. Just ask AT&T and Time Warner about their merger saga. Then there's the Federal Communications Commission. They've got a say in this too. They're concerned with things like media ownership rules and public interest obligations. Will this merger lead to too much concentration in the media market? That's what they'll be trying to figure out. And don't forget about international regulators. This is a global business after all. Each country where new Paramount will operate might want to take a look. But here's the wild card: the possibility of a superior bid. Section 6, Stock Market Shakeup. What this means for investors. Alright, let's get down to brass tacks. What does all this mean for you, the investor? Whether you're holding Paramount stock or just watching from the sidelines, this merger is going to shake things up. We're talking about potential for some serious market moves here. So pay attention, because this could be a game changer for your portfolio. First off, let's look at Paramount stock. It's been in the doldrums lately, trading at a fraction of its former glory. But this merger news, it's like a shot of adrenaline. We saw the stock jump as soon as the announcement hit the wires. And that could be just the beginning. If investors buy into the vision of this new media powerhouse, we could see Paramount shares climb even higher. But remember, the market can be a fickle beast. Nothing's guaranteed. As always in the stock market, it's a game of risk and reward. Section 7. Content is king. The streaming wars heat up. Listen up, folks, because this is where the rubber meets the road. In today's entertainment world, content is king, and this merger is all about beefing up that content muscle. We're talking about creating a media powerhouse that can go toe-to-toe with the big boys like Netflix, Disney, and Warner Bros. Discovery. It's time to strap in, because the streaming wars are about to get even hotter. Let's break it down. Paramount's got a massive library of beloved franchises. We're talking Star Trek, Mission Impossible, Transformers. The list goes on. But they've been struggling to keep up in the streaming race. Enter Skydance. These guys have a knack for breathing new life into old properties. Just look at what they did with Top Gun Maverick. That's the kind of magic new Paramount is banking on. But it's not just about rehashing old hits. This merger opens up new possibilities for original content. Skydance has been killing it with their Netflix deals, churning out hit movies and shows. Now they can bring that creative firepower to Paramount Plus. We could be looking at a whole new slate of must-see TV and blockbuster movies, and in the streaming world, that's how you attract and keep subscribers. Section 8, Debt, Dividends, and Dollars, Financial Implications. Alright, time to put on our green eye shades and dive into the numbers, because at the end of the day, this merger is all about the Benjamins. We're talking about a massive financial restructuring that's going to have ripple effects across the balance sheet. So let's follow the money and see where it leads us. First up, let's talk about debt. Paramount's been carrying a heavy load, and that's been weighing down their stock price. This merger helps lighten that load. Skydance is taking on $3.5 billion of Paramount's debt as part of the deal. That's like your rich uncle paying off your credit cards. It gives the new company more financial flexibility. They can invest in content, technology, or even acquisitions without that debt albatross around their neck. Now, what about dividends? Paramount's been a reliable dividend payer for years. But with this merger, all bets are off. The new company might decide to plow that cash back into the business instead of paying it out to shareholders. That could be a tough pill to swallow for some investors. Section 9, Global Ambitions, Expanding Paramount's Reach. Hold on to your hats, because we're going global. This merger isn't just about dominating Hollywood, it's about conquering the world stage. New Paramount has its sights set on international markets, and that could be a game changer for the company's growth prospects. Let's take a whirlwind tour of their global ambitions. First stop, Europe. Paramount's already got a foothold here with their Sky partnership, but this merger could supercharge their presence. We're talking about more local language content, bigger marketing budgets, and maybe even some strategic acquisitions. The European streaming market is still up for grabs, and new Paramount wants a big slice of that pie. Next up, Asia. This is where the real growth potential lies. China's box office is huge, and the streaming market in countries like India is exploding. Skydance has already had some success here with their Netflix deals. Now they can leverage Paramount's existing infrastructure to really make a splash. Section 10, the competition reacts industry-wide ripple effects. Buckle up, because this merger isn't happening in a vacuum. When a deal this big goes down, it sends shockwaves through the entire industry. Everyone from Netflix to Disney is watching closely. And you can bet your bottom dollar, they're not just sitting on their hands. Let's take a look at how the competition might react to this seismic shift. First up, let's talk about the other legacy media companies. We're talking about Warner Brothers Discovery, NBC Universal, and Disney. They're probably feeling the heat right about now. This merger creates a new heavyweight contender in their arena. Don't be surprised if we see some counter moves, maybe more mergers and acquisitions, or perhaps a doubling down on their own strategies.